Are you ready to take your first steps towards financial freedom by investing in property? Whether you're a first-time investor or you've started your portfolio but need some help continuing to grow, 2022 REB Buyer's Agent of the Year and Rising Star finalist Lachlan Vidler and his team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take your next step in growing your portfolio. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment property. Visit atlaspropertygroup.com.au to book in your discovery call absolutely free of charge.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, Phil Tarrant here. How you going? Executive Editor of Real Estate at Momentum Media and host of the Smart Property Investment Show. A real kick out of recording this podcast that gives me a couple of times during each week just to rethink and reconnect with property, even though I might not be thinking about it. That sort of realigns me with it and gets me thinking about what's going on and at least take interest, additional interest in the market. And I leverage really as a property investor the brand Smart Property Investment for my news, information and market intelligence. I also catch up weekly with a gentleman by the name of Tom Panos. And sometimes we play this podcast on this particular channel. It's called Real Estate Exposed. We sort of get stuck into real estate and we have those conversations that people typically want to have and are having, but not necessarily on air. We go behind the scenes in real estate, the business of real estate, what agents are doing, what property managers are doing, but also what the market is doing. And I draw on Tom's 20, 30 years of experience in real estate and as an auctioneer to get real ground truth of what's happening in real estate at any given time. So these are the different metrics, the mechanisms that I use to understand and keep aligned with property, but catching up with guests and professionals twice a week on the Smart Property Investment Show really is where I learn. It's where I get most of my information and how I can be better informed to make more informed investment decisions. So hope you're doing the same thing. That's why we do it. It seems to be working. I was looking at the stats on this podcast just the other day and listens are off the roof. So whether there's more property investors in the market who have found us or we just keep getting better at this, who knows? But I think we're going to probably mark at least 5 years on this podcast pretty soon. So maybe we need a birthday cake and all that sort of hullabaloo. But today, I was just checking out Smart Property Investment this morning and I was just thinking about, wow, I haven't done a bit of an update on news. We've had a lot of guests in recently and I know that's been resonating with all of you. Thank you all again for all of that feedback coming in. A lot of you guys and girls are emailing editor@smartpropertyinvestment.com.au. That's a good place to do it. But thanks also to all those people who are leaving those reviews on iTunes and the other podcast platforms. As I mentioned beforehand, it's just not myself here recording the podcast. I get the good bit of it, the hour of power. I have a chat with someone, but there's a big team who are supportive. They do all the post-production, the organising, the coordinating and making us sound good, and they get a real kick out of those reviews. So please keep them coming. I do appreciate it, and it is noted and it is acknowledged. A lot of questions have come in recently also. We're just gearing up for a Q&A episode pretty soon. So hold fire, watch this space. But today I just wanted to go through some of the headlines that took my interest this morning. I was looking at smartpropertyinvestment.com.au. I've asked our editor, real estate, to come in and have a chat with me, Grace Ormsby. We're going to get stuck into it, probably give some sense to these and interpretation of them. Grace, how you going?
I'm good, thanks, Phil. How are you going?
Good. Very good.
Yeah, there's always something going on in the property world, isn't there? Well,
it's one thing that you're guaranteed with property is that there's always something going on. It's either the best time ever to be in property or the worst time ever to be in property. There's either people becoming property gazillionaires or people who are blowing all their dough. I think we're in the latter market at the moment. There's still a lot of fear-mongering around property. And as I mentioned, I do chat with Tom Panos every week. And you can watch it on the Facebook as well. Just go and find it. He reckons that we're already 6 months through this cycle and the numbers are now just only starting to come through. A lot of people I'm chatting to, Grace, and I'd like your view on it, are saying that this is going to be a bit of a short, sharp interest rate cycle as we come to terms with and deal with the inflationary pressures. A lot of that is starting to alleviate now. I note, timber pricing in the US is already half of what it was, a couple of months ago. So a lot of those pressures are starting to abate. And my read of it, and this is what I'm hearing from other people, is that they'll continue with the upwards rate cycle until they get to a point where they cause an effect, and then it'll probably come back a bit, and then property markets will rebound to some degree. Who knows? there's a lot of experts out there.
Yeah.
We're not experts. We're just a couple of journalists that have a bit of a yarn.
Yeah, we just see what's going on each day, don't we? But it is interesting, and I have spoken to quite a few economists lately, and their one piece of takeaway or their key advice at the moment is basically it is just a cycle, remembering that it's happened before, it's going to happen again. And while the good times don't last forever, neither do the bad times. So
this is it. And a lot of the rhetoric now is around everyone was fear of missing out 6 months ago. Now it's all about fear of overpaying. Guess what? You only really realise if you overpay in property if you buy it and sell it in a pretty quick period of time. If you do overpay in this market and you're, particularly as an investor, you've got a buy and hold strategy, you're probably not going to burn too much.
No, and I think remembering that a normal cycle length is around 7 to 10 years. And if this one happens a lot quicker than that, then you're not even going to have to hold it for that long to still be in the black. So it is an interesting one, but I don't think, it needs to be as negative as we've been hearing.
Well, we try not to be negative doomsday merchants. So I think the best time to invest in property is when you can invest in property. And for a lot of people, that's going to be in this market. And if you have you been sitting on the sidelines waiting for a moment, affordability is a lot more favourable to investors and also homeowners. So there's probably some bargains out there. I've been chatting about it on this podcast quite a lot, so I'm not going to go over it. But Grace, a couple of headlines that really stood out for me. First one, and I've got sort of 3 or 4 I want to run through. I've got 10 minutes or so. WA launches home loan pilot for apartment purchases. Now, the WA government has announced a new home loan pilot for 2 or more bedroom apartment purchases in partnership with Keystart. The McGowan Labor government has announced a low deposit mortgage pilot that enables WA residents to purchase 2 or more apartment purchases. It's called the Urban Connect Home Loan. Delivered by a low deposit lender, Keystart will offer 300 borrowers the ability to purchase apartments in medium high density developments with 2 or more bedrooms, close to transport hubs and in urban locations around 189 suburbs in the Greater Perth area. Tell me about this. What's all this about?
It's very interesting, and I think if you do read behind the lines, there's probably a little bit more to the story than, what those headline things are, where you can be getting a deposit with as little as 2% and purchasing an apartment in the city of Perth. And I mean, it is a great opportunity actually for investors, I believe, in the sense that this scheme is a very open scheme. Apparently, it's something like $180,000 is the maximum salary that you can be on and still participating in this scheme.
So it's not a first home
Not a first home buyer.
So just for anyone, buy an
just
apartment.
For anyone. Don't need to live in the property for a certain amount of time. You can be an investor. I'm assuming there's...
But you've got to live in Perth.
Well, we still don't even really have that, that much of the criteria worked out. So that could be something that does require, we might get some more insight into that down the track. But at this stage, it's looking like, from my perspective anyway, oversupply of apartments at the moment.
I was going to say, it just sounds like a fire sale. Yeah. So they're pretty much going, we've got all these apartments that have been built, no one's in them.
Yep.
Let's shift them.
But
there's rental challenges over in WA, and get ready for the next building. Boom of I don't know. There's a big question mark for me around this.
Yeah, I mean, it's interesting in that we have seen a bit of commentary around Perth being a great place for people to invest over the next longer term than 12 months. It's more looking down 7 to 10, maybe even to 15 years ahead. The city is changing. I don't think they're going to be relying as much on mining down the track. They've got to obviously go through a transformation for that. But for people that are in the long game, maybe it is a good move. I'm not going to pass any judgment either way on that, but it is definitely an interesting move. And also key, I guess, here is that it's a pilot at the moment.
Yeah.
Still more information we obviously need about the parameters of this because, at the rate it's going, it sounds like you can be 1 month's income for someone that's on $180,000 and they're going to be bringing in, they'll easily be able to pay off that deposit immediately. So for some people, it might be a good thing. But yeah, very interesting.
I have some problems with it personally.
Yeah.
And I haven't, to be honest with you, I haven't really looked too much into it. But if they're trying to shift the stock that no one wants, what's going to happen? You might put a bit of competition, upwards pressure onto it. Therefore, you're going to get an upwards lift in prices. But that means other people are going to be overpaying for properties, which potentially might come off in value. You talk about medium and high density apartments. I sit there and think this is a property investor, big stratas, a lot of things that go wrong, huge blocks and everything that comes along with it. The integrity of the build, who knows? We know there's been a lot of not so good apartment blocks built in the capital cities over recent years. Yeah, just
I think people, I mean, it's an option that is there.
And I might be completely wrong about this, by the way.
We also just don't have enough information. You know, it is an interesting perspective for them to be taking, an interesting stance really for them to be taking on increasing owners.
If there's anyone out there that knows more about it than us, come and have a yarn to us. If there's anyone in the McGowan government there, come and have a yarn with us. Anyone from Keystart, come and have a yarn with us. Maybe we're completely wrong about this. Maybe it's a great idea. I'm trying to understand why the government wants to pony up cash around this, though. I don't know. It sounds like they're just trying to inherently
put a flaw there,
put some strength in it.
Yeah, yep.
I'm not going to. I don't know enough about it to be too informed about it. I'm not going to be too much of a hard time, but not everything is as good as it seems.
Watch
sometimes.
This space. Well, as soon as we find out more information, we'll definitely put it up on smartpropertyinvestment.com.au.
Okay. All right, go and check that out. And if you're not yet subscribing to that, so you get the email, so you're the first to see, you can also do that on smartpropertyinvestment.com.au. Go and check it out. Now, Grace, another story here, but just going to go break beforehand. Stay with us. Back in a moment.
Ever wondered how you can invest like the top 1% of Australian property investors? Henderson Advocacy has been at the forefront of helping everyday Aussies improve their financial freedom. So if you're a savvy investor or someone just starting out on their property journey, give Henderson Advocacy a call today. Head to www.henderson.com.au. Don't invest alone. Invest smarter.
Welcome back, everyone. It's Phil Tarrant, host of the Smart Property Investment Show. I'm with Grace Ormsby, our editor, real estate and Momentum Media. I work very closely with Grace. It's our job, mine and Grace's, to help steer the narrative of what our real estate brands talk about at Smart Property Investment. There's many of them. Business real estate business, Grace, which I know you're highly connected in with. And Smart Property Investment, whether it's audio, whether it's broadcast, whether it's the websites, typically it goes through Grace's hands. So how are you going at the moment with, are you getting bombarded still with press releases and everyone telling you about the next big thing?
Always.
Yeah.
I mean, it is an exciting time to be working in the space. I think we've seen a pretty dramatic shift over the past 6 months, but a lot of the businesses out there are still forging ahead. You know, we're still seeing a lot of network news, a lot of agents that are still highly engaged in their suburbs, and we're seeing different strategies obviously coming from them, and which they have to be doing. But it is very interesting, and I think, you know, as we've said plenty of times across on real estate business, and you've probably even heard it on here too, we're seeing agents that are better at their craft, you know, better at buying and selling and helping their clients. And for investors as well, that's what you want, someone that's going to be helping you along every step of the way and securing that best price.
Yeah, and property investors right now, this market that we are in, and we've been in for some time, the rules of the games have changed a little bit. A year ago, try and get a real estate agent to return your call. If you're trying to lowball on a property, you wouldn't get it. The Best Buyers agent has been doing this now for 6 months. Balance of powers is moving back in the hands of the buyer, absolutely, in this market. So if you are out there and you're looking for property, you're looking for bargains, or you're looking for the right assets, start calling real estate agents. I'd be happy to take your call right now, because with these shifting markets, this is where highly connected people in with real estate agents, you're going to get stuff. Everyone talks about it, off-market type properties or pre-marketed properties. If you're not talking directly to real estate agents, you're not going to be getting that stuff. But back to the point, Grace, around the important work that real estate agents do. Story here, which just pricked my attention, because it just goes to show that when you're buying real estate, whether you're an occupier or a property investor, you're talking big sums of dough, right? There's huge chunks of cash getting transferred, right? Whether it's the lenders moving money for mortgages, or you're putting money into agents' trust accounts, you've got to be super careful, because there is malicious and nefarious actors out there who will try and steal your money. So if you are getting involved in this sort of stuff, be hyper vigilant. Story here: prospective renters lose $23,000 in agency email hack. This is on smartpropertyinvestment.com.au. Scammers who hacked into a Perth Western Suburbs real estate agency's email account were able to steal thousands of two prospective tenants. WA's Consumer Watchdog is investigating a report. Two separate renters got scammed out of $2,300 in bond payments and rent in advance to a bank account that was not associated with the rental agency. So what happens here, this is cybercrime, where they get in there and they change the bank details that you pay into, thinking that you're paying it into a real estate agent's trust account or bank account, where it's really going into the scammer's bank account. This is what's happened here.
Yeah, I mean, it's not the first time we've seen it, and unfortunately, I don't think it will be the last time
It
that we
definitely
see
won't be
this
the
kind of
last.
thing happening. But I guess it's just a really good reminder for everyone out there. You need to be vigilant, whether you're working as a professional in the property space or whether you're a landlord. You might even be, paying for the services of your property manager or putting money into a trust account with an agent because you're looking to sell. There's just so many ways that things can go wrong, and the way that technology is going, if you're not really careful, this could easily happen to you. And I think it's just a really good reminder to make sure everything's secure. If you get a request for a payment, that you ring up the agent or the property manager yourself, say, hey, I just have this request. Are the details here correct? Because, it can look legitimate. It can look like it's coming from the right place and it still might not be. So make sure you're putting in that extra effort. It is time and effort that you need to put in, but far out. You don't want to be.
I'd be absolutely agreeing with you in every sense of the way, because if this happens to you, guess what? You're probably not going to get your money back. It's going to be really, really hard. So call up. I do it all the time. I call up and say, I've got this request. This is the bank account. They've asked me to put that in. Is this your account? Exactly it. And just do it. It doesn't take long.
No.
Doesn't take long.
Super simple step. And they're going to be happy to talk to you about that. It is not the kind of thing you want to be putting money in the wrong spot for. And as you said, Phil, your money is gone. Once it's gone, very, very hard for even the banks, if you've gone through a secure transfer, for them to even look at trying to get it back.
You're not going to get it back. It's gone.
Mm-hmm,
It's gone. Say goodbye to it. And you can blame as many people as you want, but guess what? You're still out of pocket. And you see people just get crippled in this. They can really destroy property transactions. The story here, Grace, and we'll do a little bit more on cyber stuff moving forward, something I take a particular interest in, but outside of scope of this chat. But this here, and as you know, I was touring for the Better Business Summit, which is the big event for mortgages earlier this year, and we had a person there speaking about the metaverse, right? We all know Facebook's rebranded to Meta, and whatever your view of Facebook is, and I know it's quite a polarizing mindset towards it, but everyone's sort of now talking about investing in this virtual real estate, right? And I sort of sit there and just go, okay. I must be, I don't know a lot about it, and I'll probably get more informed over time, but something would need to happen
majorly for you
to even consider it. But the story here, Facebook's decision to rebrand as Meta last year, and founder Mark Zuckerberg's commitment to establish a new virtual world for users, in inverted commas, is just one example of a new wave of investment opportunities being born out of technology. Metaverses, including those outside of Mr. Zuckerberg's control, present the possibility and likelihood of digital land investments. Yeah, this story goes on. There's a lot of quotes around it. I must admit, and this is all to do with non-fungible tokens and all this sort of stuff. I don't know. I can't see the utility personally, and maybe I'm an idiot. I can't see the utility of virtual real estate yet.
Yeah, one of the reasons that I did put this link into your email this morning, Phil, is because I do think it is something that we need to keep an eye on. We're probably not at that point yet where it's going to be what regular people do. It's probably not the most efficient way to be diversifying your assets in bricks and mortar real estate, but I think it is something that's going to grow in popularity, and whether that's a good thing or a bad thing remains to be seen. We're obviously seeing crypto explode at the moment, but we've also seen some pretty big losses off the back of that too. So it comes at a bit more of a riskier weighing, I think, but it is interesting that, there are companies out there that are now identifying, and these are big companies. This comes from one of the giants, Knight Frank, and we do a lot of work off the back of their data, and they see it. They've identified it as a pretty big emerging investment space for the future.
And if you choose to invest in digital assets on the metaverse and digital land, right? Like, don't think that it is a property purchase. You're buying a bit of digital stuff, right? Why is property and property investment such a sound investment or asset class for Australians, and why does it continue to do well over time? Guess what you do with property, Grace? You live in it.
Yeah.
It's where you put your bed and you sleep in it. You stay out of the rain.
It's always going to have a place. It's always going to have a place. Unless we, just end up in cryotherapy and we've got,
we're all in the thing. Yeah. But it never knows. There might be banks of bazillions of people sort of in hyper suspense or somewhere or other, then you might be able to go and like live in some virtual world, and maybe that's the future.
It does sound a little bit dystopian.
Like I tell you what, all my investment properties, everything went wrong, I can go and live in one.
Yeah, you can. And I guess that's what we don't get as soon as something goes into technology. You are talking about these very secure, there's a lot of blockchain behind that. There's a lot of things that I don't quite understand, but I mean, they're gaining in popularity, and there's people that are spending hundreds of thousands of dollars
there's
already
people
on
transacting
this.
on real estate, but it's not. Is it real estate? Is a website real estate on the internet? Maybe. What is it? It's a thing, right? So, very different asset class to physical property.
Yeah,
we'll keep an eye on it, but
it's an interesting one.
Yeah, it is. Yeah, I must admit, I can't get excited about it.
Yeah, you got to debate whether it's, what is the real definition of real estate at the moment. Probably doesn't count, but
that's a good point.
We'll see.
Yeah, well, I know there's a lot of people who have invested. I don't know. I can't remember what they're called. Like, these games where you pretend to be someone and you live in it. What do you call that stuff? People are like, it's that their whole lives are spent inside of this stuff, and they buy and sell real estate inside of it.
Minecraft and all that. It comes back to that. There's obviously, I'm not a gamer myself, so you can't go into it. But there are a lot of worlds out there for people to be exploring.
Yeah. Anyway, speaking about the real world. Interest rates going up. We'll have a chat about that. Let's go to another break. Back in a moment.
It's time to get help. Interest rates are increasing. Inflation has hit an extraordinary 5.1%, and the chance to secure a golden egg property is getting narrower by the day. Dragan from Buyers Agency Australia has been presenting the facts and helping property investors make smarter, well-informed, educated decisions in property for years. So what are you waiting for? Get in touch with Dragan today at www.buyersagencyaustralia.com.au. Invest with integrity.
Welcome back, everyone. Phil Tarrant and Grace Ormsby, your team at Smart Property Investment. Now, Grace, 50 basis points this month in July. The Mail says that there's going to be some more on the horizon. A story here, rates to boost by 50%, pause by September. Westpac on smartpropertyinvestment.com.au. The bank's chief economist is pitching the latest Reserve Bank prediction. Reckons another 0.5 percentage point next month, so that'll be August.
Yep.
Followed immediately by a freeze. This is sort of pretty consistent with what we said in our intro. It's going to go up and stop and come back.
Yeah.
And people tell us we don't know what we're talking about. Who would have thought?
These are forecasts from, the biggest banks in Australia. And
they got it so right during the start of
that 30% drop.
Yeah, just right on the monwe. But
it is interesting.
I'll tell you who got that right, though.
Who?
Phil Tarrant and Tom Panos.
Oh, of course you did. Of course you did. We need to look back and actually see if that's from the archives.
Actually, if we didn't get it, I remember it getting it right, but maybe it was close.
Hindsight is a wonderful
thing.
thing.
Call us out.
But, we do expect 1.85% interest rates pretty soon. I don't think anyone can be debating that one at all. If it doesn't happen next month, it will happen the next month. So, it is what it is.
It is what it is. So the question is, what do you do about it as a property investor? Well, you do what I'm doing right now, and you're actually getting right across how much all your rates have gone up. You'd be recording it, looking at the financial impact of that. So it's more expensive to hold property if you're on variable interest rates. So work out what that is, and I'd be speaking to your mortgage broker pretty quickly, because what happens in a rising rate environment, well, what also happens in lockstep with that is competition increases. So there's a lot of lenders out there now who are offering pretty attractive stuff to get your home loans. Now, largely they're not going to be the big lenders. They're going to be sort of second tier or non-bank lenders or neutral lenders, all that sort of stuff. So think outside the box when it comes to who your lender is, and you should be able to chase some pretty good rates moving forward. So look at it at an expense line. So how do you can minimize the cost to hold property in a rising rate environment? That means paying less mortgages. On the other side, on the revenue side of things, Grace, you got to be looking at whether or not your tenants are paying market rent. And let me tell you, probably a lot of your rents are out of market at the moment. So if you haven't had a chance to review that for some time, or if you've got leases coming off, make sure that you speak to your property manager and say what is market and get them at price the right way. Especially
if you're in an area where rental vacancy rates are below 1%. I mean, they're not very high many places in Australia at the moment. So that is a really good way to calibrate, what's actually going in your local market and how can you be protecting yourself and your own asset against, those rising rates, because they're probably going to keep going up. We might see a bit of a pause, them come down, but you don't want to get stuck. You don't want to be 6 to 12 months behind the 8 ball when it comes to that kind of stuff.
Yeah. And it adds up. This compounding effect of rising interest rates, you're going to end up paying significantly more on your mortgages than what you were before rates started moving. And remember, we're just in a normal rate environment. Like, it's not a bad thing that rates are going up. It's indicative of a whole bunch of different factors. However, get on top of it. What you can do, you invest time, energy and effort to making sure that your rates are right. And if you're struggling with that, and I'd probably get in trouble if I didn't mention it, Finny Mortgages, finny.com.au, mortgage broker that I'm using to refinance the Smart Property Investment portfolio through this process as I'm considering it. I'm sure they'd be happy to go and have a chat with you. You can go to the website. I think there's a form and stuff you fill it in and they'll get in touch with you, finny.com.au. That's good, Grace.
Awesome. Looking forward to the next one already. There's always a lot going on at Smart Property Investment.
What sort of guests are we looking for? I know we want more ladies into the studio.
And we've been working on that, and we should see a few more of them coming over the coming weeks and months. But anyone, even if you're just, starting out, if you've just bought one property and that's the start of your property investment journey, we want to be hearing from you. You don't need to have a certain amount of properties to come on the show. You just have that investor mindset. If you're thinking about investing in property, guess what? You're a property investor. Yeah. You've got to be sort of already 3 steps ahead in your mind before you're actually even on the property ladder. So reach out. Anyone, we want to hear from you. Good. Editor at smartpropertyinvestment.com. It comes to you, doesn't it? Yep, absolutely. Okay, so it gets read, gets responded to really quickly. Yep. You must get so many emails. That's crazy. Yeah. Okay. And Q&As, we like Q&As. What do you do? Just send us an email saying, hey. Just let us know what your questions are. Get answered. Yeah. Pitch ideas for upcoming podcasts. We always take a read. We're always interested to hear what people want to be hearing about. And that's all possible straight through that email address. Straight to the email address. Well, thanks for your time today, Grace. Thanks, Phil. Keep up the great work, you and your team, keeping Australia informed around property, smartpropertyinvestment.com.au. I hope you enjoyed that, everyone. Remember, a quick favour for me, if you don't mind, keep those reviews coming, whichever podcast player you're listening to this. Social media, if that's how you like to get your info, Smart Property HQ is where you'll find us. See you again next time. Until then, bye-bye. The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
It's safe to say the property market has been red hot over the last few years, with some of the markets we've selected in 2021 rising over 40% in a 12-month period. It's very likely that if you're a property owner, your property has gone up 20% minimum in value in the past 12 months, and you have most likely accrued sizable equity that can be recycled and extracted to build your investment portfolio. With interest rates increasing, you might be wondering where to invest to maximise capital growth and cash flow in 2022 and beyond. Well, to save you time, energy and guesswork, award-winning author and regular guest on the Smart Property Investment podcast, Paul Glossop and his team at Pure Property Investment have outlined the top 30 affordable suburbs poised for strong capital growth over the next few years with sound cash flow. Grab your free Top 30 Guide to Property Investment guide today at purepropertyinvestment.com.